The Russian president wants to depend less on the dollar. The Russian finance minister says there's no substitute for the dollar. In China, there is talk about diversifying out of the dollar. In Japan, there is talk that the trust in the US dollar is unshakable. What is it now? Are people confident in the dollar or are they not? I'd like to point out that if you talk to the CEOs of the world, the presidents, the heads of states, they are truly concerned about the dollar. But when you talk to the finance ministers, the CFO level, you hear a lot of talk about how there is no substitute for the dollar. And both of them are right. But who do you think will set the tone? The CEO goes to the CFO and says, we want to diversify out of the dollar. And the CFO says, well, we can't, at this stage anyway. And the CEO will just tell them, well, stop whining and do something about it. The CFO says, we don't have the tools in place. And the CEO will say, well, go and put the tools in place. And using that corporate analogy, that's kind of how we see things happening. Quite rightfully so. There is no immediate substitute for the US dollar. The US money markets are the deepest, most liquid ones in the world, even with the recent turmoil. The Eurozone is a second, but it's a distant second. And then there is really no third in the world, especially not if you're talking about the amounts of money that central banks like to deploy. What central banks have to do is to encourage their governments to develop the domestic markets, especially if you look at Asia as well, that after the Asian crisis of 97, 98, Asian countries realized they need to have more reserves, but they piled them all into US dollars. The next phase, in our view, will be to develop domestic markets. And this isn't just about allowing investment into local countries. This is about developing mature markets where people feel confident investing, not just in the equity side, but in particular on the fixed income side. So Asian countries don't have to raise their money in US dollar, but can raise them in domestic currency. This will take a while, but we will see that trend to continue. We'll see that trend to accelerate. And in the context of the US dollar, note that prices are set on the margin. We don't expect the world to abandon the dollar tomorrow, at least under the most likely scenarios. What we do expect, though, that on the margin changes will happen and prices are set on the margin. So on the margin, people may buy fewer dollars, allocate less of their future money, of the future reserves to the US dollar, and that in turn might cause pressures on the dollar. There's a lot of talk about how imbalances in the world are responsible for the current mess and how we have to work to reduce these imbalances. And let me just talk about these very briefly. The imbalances people refer to is the fact that Americans tend to consume a lot but produce very little, don't have a lot of savings, whereas in Asia their savings is high and consumption is low, the production is very high. And the first thing I'd like to mention is that imbalances are a natural phenomenon in the world. They may not be very desirable, but we don't have a flat world. Imbalances will always happen. But what we do have control over is whether the valves are in place, where money can flow, where things can adjust when you have imbalances. I like to point to New Zealand, where the current account deficit, the primary measure of an imbalance, was reaching 10%. It's unsustainable to have a current account deficit for an extended period of, say, 5%. That's at least historically the case. Typically when that happens, the currency plunges afterwards, and then you have a lower price level from which you can compete again. And indeed, that's happened in New Zealand. It's been quite a roller coaster ride. Now, New Zealand in particular has had a hands-off approach to this crisis, more so than in any other country in the developed world. And what happens as a result, that the recovery in New Zealand may be much stronger. Take on the other extreme, other side of the world, Latvia, one of the Baltic countries, has a current account deficit of 26%. Amazing, unsustainable, but a pegged currency, pegged to the euro. And now, they recently tried to issue some debt. They had exactly zero bidders. The currency is unsustainable. The problem is here that as Latvia may go down, it will drag down other countries with it. Sweden in particular, with a lot of exposure to Latvian banks, to the banking system there, is going to create a major crisis. The question is how people will react to it. But the point here is that while it is no fun, if you ask anybody in New Zealand, to have this sort of turbulence in the currency markets, what will happen is that the market forces will help you to get through it, to adjust it. Whereas if you don't do it, if you postpone the day of reckoning, it's just going to be an amazing mess, potentially anyway. So if we fast forward now to the talk that we had recently at the finance ministers, where suddenly the talk has shifted from crisis mode to how to find an exit strategy. And that has been motivated very much by a concern around the world that there may not be an exit strategy. And when that fear rises in the market, inflationary fears rise, because currently we're printing a lot of money in many countries. And so the step that finance ministers have taken is to appease people and say, oh, we are concerned about the exit strategy, we will do something about it. The trouble is that that talk is not very believable. If you look at these green shoots that we've had, sure, we've had rising markets for a while in the last couple of weeks, but many of the problems persist. A lot of the green shoots are talked by policymakers. So I'd like to point to a few things. For example, the mess in the commercial real estate sector, the rising interest rates as long-term bond prices are really plunging, and then the need to finance the debt in the U.S. We believe that every business day for the rest of the world, over $15 billion will have to be raised, a huge ramp up from what has happened in the past. That will push up interest rates further. Similarly, in the Baltic countries in particular, we have a bigger crisis yet to see, as we see the playing out of the inability of these countries to raise debt. There may be solutions to that. Central banks will come to the rescue, but we don't think central banks are ready to mop up this liquidity. We see a lot of tough talk right now. That should help keep a lid on interest rates in the long term of the yield curve and the longer term interest rates. But later this year, we believe that the market forces will take over again, and then we'll see how central banks react. We don't believe in this tough talk at this stage, but in the meantime, volatility may prevail in these markets. What we are concerned about is the risk that we will see substantially more money printing to try to push down interest rates, as the Federal Reserve may panic to keep down these mortgage rates. And because there is that risk, and because interest rates may then artificially be kept low when the Fed prints too much money, there may be a serious threat to the dollar. Please visit our website for more information on the dollar, on the mutual funds we have, and we look forward to seeing you again soon on one of these YouTube videos. Please subscribe to our videos or our newsletter. Thank you.